there's symmetry in that we hit the low, we came up, we touched here, we came down here again, we then came up, then we came down again, then we just hit the high. Then look at what we did yesterday.
Welcome. This is The Daily Crypto. Once again, we have Gareth Soloway to brief us on his trading plan and what moves he has planned out. Watch this video till the end because every second is full of vital information that could help you in making some profits after this painful crash.
So a basis point is 0.1%. So it's really tiny, right? It's just 0.1%, not even 1%, 0.1. So 75 basis points means it's 0.75% was the Fed funds rate raised, right? And basically that's the level that what the Fed charges to lend money. And it basically what it does is it sets the kind of the floor on what banks charge you. Banks are always going to charge more, right? Because if they get X from the Federal Reserve, they need to charge Y to make money. So again, that's really what it is. But essentially to kind of put it in super basic terms, the more interest rates go up, the more people pull money out of risk assets that are risky and say, oh, well, instead of taking risk here, I can get a guaranteed rate of return over here. And that's why it tends to slow the economy down. It sucks money out, which is why Jerome Powell's raising rates, because inflation is so high, he has to suck money out of the system to slow inflation down. So hopefully that was a little bit of a basic understanding of it. But yeah, I mean, 75 basis point hike today from Jerome Powell.
With the recent hike in interest rates by Jerome Powell, Gareth explains how increasing the interest rate slows the economy down, and we usually see risk assets like stocks and crypto fall.
I mean, inflation is still it is high in terms of like people, you know, if you go to the grocery store, if you buy anything these days, I mean, prices really have gone up. So he's been feeling the pressure, I think, politically too, right? I mean, you're in a midterm election year. Biden wants to have a shot at keeping the Dems in control. And so people aren't happy that when they go to the store or they fill up their gas tank, it's costing them a ton of money. So we have to get inflation down. Inflation really is something that sucks because if you have a 10% inflation rate, it means that $1 you have today, next year it's only worth 90 cents, right? And so if you think about that, the money you're making today, if inflation stays high, it's worth pennies on the dollar in a few years. And that's why, you know, you have to bring down these inflation numbers. So again, the idea here is he did raise, he's been raising a lot. The reason, and this is really counterintuitive, the markets are ripping right now after he raised. And most people would scratch their heads and say, why is the market rallying on this? And the answer is this, is even though he raised 75 basis points, he basically threw the market a bone saying, we're gonna be a little bit more cautious. We're getting close to the end of hiking. And I know, again, this is counterintuitive, but the market is so concerned that he's gonna overhike rates and drive the economy into a nasty recession that it actually is happy that he's getting close to the end. They're hoping inflation comes down from here and that he's done hiking, and then boom, crypto can rip again. And we're seeing a pretty nice move today.
You know inflation is high when people like Jerome Powell start admitting it. Even after raising rates, we are seeing a bounce in the market because investors are assuming that Powell is done hiking rates, which will result in economic growth. It is a risky approach and its sustainability can be questioned, but we will have to wait and watch what unfolds in the future.
Yeah, so basically right here was where the announcement came out. So you can see what crypto did from that point, just ripped to the upside on his slightly dovish side. Dovish, by the way, that term means that he was more nice to the markets in terms of his commentary. He wasn't so hard-nosed. The other term is hawkish, where he's going to raise more and more and just kind of crush the markets. So he was a little bit more dovish. The market loved that. Bitcoin loved it. We've seen all of crypto rally here. The stock market's rallying. And in all fairness, I mean, we've gone even as far as to see the US dollar starting to come down because let me put up the DXY. This is the dollar, and look at the dollar collapse on that statement. So
wow.
The dollar had a big drop here. And the idea here is that if he's not going to raise as much, then it's likely that he'll start printing again. Therefore, that's more dollars in the system. So this is very whacked. I mean, trying to describe the way this is all working together is really messed up because you could say, okay, well, if he's going to print more money, then isn't that bad for inflation? But the markets are more worried about a recession right now than the inflation side. We know the inflation's coming down. Look at gas. Look, I mean, all these things have collapsed. Let me show you guys a picture, a gasoline chart here. Let me go to the daily chart. So this is the gas chart. You can see this is the daily gas chart. So this was June 3rd up here. So you can see gasoline has come down. That's going to bring down inflation. It's taking less money to fill up their gas tanks. And so again, we will see inflation come down. Now the market likes the fact that he's maybe closer to being done raising interest rates.
As soon as the announcement by Powell came out, the dollar fell drastically and we saw a big rally in the cryptocurrency market. With inflation coming down slowly, investors are hoping that Jerome Powell doesn't hike interest rates further, hence the bounce in all financial markets. If you're loving these Gareth Soloway videos, hit the button and subscribe to our channel to show your support.
So a lot of people, so I was bearish when we were at 68, 69,000. The charts were telling me that was going to happen. You have something called an M double top up here. This was a classic sign of resistance. The market again. So again, the market was guiding us that this bearish market was coming into play. Interestingly enough, I went bullish down here in the near term. I have a short-term price target of 25.5, maybe 28 to 30,000. I'm going to show you why. Just some cool stuff. So number one, here's your 2017 high. Draw a trend line straight and look at what you just hit. So
wow.
Basically the market stopped right at that 2017 high. Technically speaking, there's going to be some buyers there that are saying, oh, remember when it was at that level? Let me buy into crypto here. So that's number one. The other thing is, look at this. Look at how beautiful the market works. I'm going to go to something called a parallel channel right here. And what I'm going to do is I'm just going to connect these recent lows and look at what happens here. So we're going to connect these lows here, all of these lows, and I'm going to stretch a line right up and look at how there's symmetry in that we hit the low, we came up, we touched here, we came down here again, we then came up, then we came down again, then we just hit the high, then look at what we did yesterday. So if I came to you yesterday and I said, look at, we're at support, and support means you're at like a floor, you're standing on the floor, it's supporting you. And I said, what do you think crypto is going to do tomorrow on the Fed? You would look at this chart and say, well, it's on the floor, so it can't go down any lower. It's standing on the floor, so the path of least resistance is to the upside.
As we just saw on Gareth's chart, the price is moving in a channel, and the news from the Fed served as a catalyst to bump up the price of Bitcoin as it touched the bottom of the channel recently.
Same exact thing right here. So you just basically played pinball inside until, now this is one of the things you have to be careful about if you're in crypto. What did this pattern do? Eventually, it broke lower. So you have to be a little careful because the same thing is occurring here. Even though I think we're going up to at least 25.5, which would be this upper area here, I would be a little careful because it does potentially signal at some point we could come down. Now, the beautiful thing about technical analysis is if it breaks above here, guess what? Now it failed. Now the bearish pattern failed. Now you think about further upside. So there's not only levels to buy, but also there's levels to say, okay, now it's broken where it should have pulled back, and now it can go up more because it's broken that level, right? So
this channel adds more confusion to Gareth's plan because numerous times he has said that he is looking for one more leg to the downside and potentially hitting the 12K mark before moving up. Do you think we'll hit 28K? Or is Bitcoin going to drop down from this point? We would love to hear what you have to say. See you guys in the next video.